What is up, everyone? Hope all of you are doing good. I got a no face cam on today because the hair is not looking good. No. I'm just kidding. Typically, I go live on StreamYard, but StreamYard was having some issues. So I was like, you know what? I'm gonna just hop on YouTube real quick. StreamYard is like the connection platform, but we are going down. Which was expected. So we're gonna dive into some charts, do some TA, prepare some potential new setups. And I think a lot of people are chilling the rest of the night and the rest of the week. Because we had some great trades. This was like picture perfect. I quote, "If the market maker decides to bless us, he will give us an accumulation long right into a distribution short." The market makers were listening and blessing us. They were feeling generous. Okay, but I want to kind of start off with giving my thoughts on Bitcoin, also on the higher time frame, because I have been getting a lot of questions of Lars. What's your high time frame view? Where are we at in the cycle? This and that. So just wanted to talk about Bitcoin and then dive into some charts. Maybe if you guys have some suggestions, we can analyze those charts as well. But don't come with any low volume 5 mil market cap charts. Just some good charts, at least on decent volume. Okay, if it has volume, it's good. If it has volume, it is good. Let me check if the stream is going good. Yeah, those are the exact charts I'm looking at. How much volume do I consider high volume? Like close to 100 million. That's fine. The word is we're shorting Pepe back down to the range low. Yeah, we are. Hopefully, we can make our way down to here. That'll be my final target, but the technical target is already met. So that trade is done, de-risked, can never go wrong. But let's start off with some Bitcoin, okay? Got around an hour. Gonna try and catch some good sleep tonight because I've been lacking on my sleep. Okay, so let me start fresh. Okay. What do we have on Bitcoin? I want to actually check one thing because it just caught my attention. Yeah. That's so clean. That is so clean. Okay. So on Bitcoin, what we've been basically having is upward structure from bear market low to current bull market high while going into price discovery. Okay, so looking at the bear market low, we've been simply making higher lows and higher highs. That was a range of price action and on the 2-week time frame as of now, and we simply made a higher low, higher high, just like this. This is your true swing structure. Okay, it's kind of in line with the monthly structure as well, from low to high. Whereas this wasn't monthly market structure because you didn't have the 2 consecutive candles going lower. Okay? So that's kind of what you've been doing on Bitcoin. And the reason why we're rejecting here is obviously I like to use supply and demand for my support and resistance levels. But when you're in price discovery, you obviously don't have any supply to be looking at because there's nothing on the left. But there were many different fib levels. If you use your swing structure on the monthly time frame, you can see you kind of came into that golden zone. I always like to have the negative 618 and the negative 1 as truly kind of like my golden pocket of negative fips, where I really like rejections overall. So we came into that, and even if you refine them more down to the weekly structure to kind of get some confluence, your most recent weekly market structure pool was here, higher low, higher high. That's actually a bearish candle right there. And then obviously this one, this pool is not relevant because it's this expansion. So you have to always use the previous one to get the data for where that move up might end. And you can see that was just picture perfect. Look at that. If we get rid of the 618, look at this right there. Boom. That is just to the T, as I like to say. Okay. So definitely an area where we were expecting some sort of a rejection. And then that kind of started on Bitcoin with a lower time frame range, where we had this pullback right here, pullback right there. You had that range formation initially from high to low. I'm not going to go on the lower time frame right now because it's not that important. But you had a PO3 on that second tap, and then we extended the range high to the deviation high, and you kind of got a model 1 in here where you had TCT within TCT. Okay, right there, a little low time frame distribution that sent us back down to the range lows, which was right here. And now I remember at the range lows, people were getting very bearish, calling for lower targets. And what we were simply doing is we were looking for price to tap into our manipulation box. That's like what we were talking about last time on the macro time frame. Right here, we had this blue box, which is basically representing just the manipulation below that range, all the way down towards this 85.2K liquidity, which is kind of where this slow grind up into this bigger range actually started. Because below there, you just had inefficiencies pushing price up. And we tapped into that and reversed back up and took the high. Now, instead of using that same range point, right? Instead of using these same range pools, what I like to do is I like to check on the higher time frame if on the higher time frame, this range just looks like one market structure pool making a higher low for the higher high. Because that's always how your low time frame range is. And when I'm talking about low time frame and mid time frame and high time frame, I'm not talking about a specific time frame. I never correlate an actual time frame to the definition of low, mid, high. It's all relative to what we're looking at. So if I'm looking on the macro time frame, the daily might be the low, and the 3-day might be the mid, and the weekly might be the high. But if I'm zoomed in, right, the hourly might be the high time frame, and etc. So it all depends. It's all relative to the situation that you're in. I kind of look at it as like just different levels of structure. But if you go on the 3-day, right, this is not valid structure. To validate a model 1 on a specific time frame, or just a TCT on a specific time frame, you need to have the 6 candle rule in between the taps, which you don't have. Like on the 3-day, this is just one move up right here. Okay, no 2 candle pullbacks, no valid market structure retracements. Okay, and then you do have the 2 consecutive candles going lower here. So, and also the 2 consecutive candle expansion up here. So the purpose of this model 1 distribution was actually to create a bigger range where you can now redraw that range from this high down to that low. And that is what we have been in for a minute. Okay, where we have our initial range high, we have our initial range low, and then we have a deviation 1. And ever since that deviation, price has simply been grinding down, leaving a lot of liquidity above. And we're currently also breaking down here, kind of fighting with that lower time frame demand, which we're going to get into in a sec. Now, as you guys know, when we're trading these TCT models and we're trading these distribution models or accumulations, doesn't matter. It's always a 3-tap formation, right? So 3-tap formation where a model 2 makes a lower high, where the lower high needs to either sweep extreme liquidity or mitigate extreme supply. Or we're looking at a model 1 where we kind of take that high one more time and then we dump down. Okay. Price coming down right now, and I want to put that 85.2K liquidity also on the chart. 85.2K and price coming down right now is actually more bullish than bearish on the higher time frame, because you don't have a confirmed distribution at the highs. Matter of fact, you're leaving a reason to go back up again because there are all these highs that remain ungrabbed, okay? And typically, price doesn't like to leave, and market makers do not like to leave those highs behind, all that resting liquidity, if they want to dump price down into like significant lows, okay, or bear market lows, if you want to use the term bear and bull. So if price comes actually down here and you're sweeping all these lows, leaving the highs intact, we know price moves from liquidity to liquidity. So if you get something like this, you can potentially even get some manipulation below and just reverse it back up to literally new highs right here. So coming down first is actually not that bad, okay? I would be way more worried if we were coming down after coming up first, putting in the third tap. Because if we got something like that, I'm like, oh, like that's gonna significantly go lower. Whereas now I'm like, the focus has been on mostly sweeping sell side liquidity, leaving buy side liquidity intact, which kind of brings me to a potential, expectation of, hey, we can maybe deviate the low, sweep that liquidity, and then make our move back up again. I don't know how fast it's gonna happen. I don't know how deep that's gonna go. I would need to see in just a live environment when it happens. It could always be that if we follow our main structure from the top down, we have lower highs. Oh, wrong too. We're making lower highs and lower lows, just like this. So there is always a possibility, if I get rid of this EQ, otherwise it's going to get too messy, that this becomes our new range, right? And this range has also its initial range low, and then that initial range high. And maybe price comes lower and kind of sweeps both of these lows and turns this into some sort of an accumulation on its own, where you have your tab 1, you have your tab 2 sweeping the main low, and you have your tab 3. The reason why I like this less is, one, because we would leave that 85.2 most likely intact, and I would prefer to just grab it. But also because creating something like this right here is very similar to what price did on the left. Like on the left, you had the exact same, where you had this range here, and that also deviated this range low and did not sweep all this 85.2k liquidity. So I'm like, are you really going to create yet again another range where you deviate also the main range low, but then don't sweep all that liquidity? It's a possibility. There are many possibilities, and we'll just have to see what happens in a live trading environment when we actually reach the POI. But overall, you have range within ranges, and you just have a lot of liquidity below, and you're leaving liquidity above, right? So there are reasons to go back up again. From a supply perspective, you have to watch out for this 103.888-ish area, because this is your extreme supply. Now, I'm not a big fan of this supply zone. It is extreme supply, but the reason I'm not a big fan is because right above it, you have literally these 4 highs resting, and I would prefer if price could sweep that. So maybe just a wick through it will be enough. Maybe you still close below the block and you just swept that liquidity. That would actually be a really nice scenario. But just taking this block, what that would kind of do, let's say you do come up here, coming to that block and then rejecting, the only thing that would do would just continue kind of like this trendline liquidity of highs that are still intact, So it is worth having on your chart, since it's extreme supply, and it's always worth having extreme supply on the chart. But overall, I would prefer to sweep the liquidity. Now, you could have a range within the range here, like we just said. And checking the volume profile of this range, we can kind of see that the time we spent here created a better looking volume distribution in the range, where we can see that we have some peaks in here. That's fine. That's because of this price action. But then here we kind of can see that nice mountain shape, where it's very concentrated in the middle. Whenever you have that, your volume area high and your volume area low, they tend to turn into good support and resistance levels. Okay, so I think we're currently reaching like very low time frame demand inside of this range. I don't know if there was a block there actually or not, like 30-minute. Yeah, this block right here. The block right in that pivot point of the first higher low for the higher high on the recovery of this sell to buy. That's what you just tapped into. And that's probably kind of in confluence with that volume area low. Yeah. So I'll put that liquidity on my chart. Just like this. Just because this is your extreme liquidity, and therefore these two levels are your POIs for potential third taps from a Model 2 perspective. If you do something like this or do something like that, doesn't really matter which one. I would prefer the upper one, because then it would sweep all those highs, which just makes it better. Because they're easily, they're grabbable, because they're resting there so nice. So if you go up from here, literally if you simply go up from here, I would look for shorts, macro swing shorts at these two levels and the range high as well for high time frame Model 2s or a Model 1 distribution schematic. And that is if you go up from right here, okay? Which as of now, no confirmations or surprises giving me any signals for it to actually do so. If we go lower, okay, then we can watch for this blue range with the blue dots to turn into some sort of an accumulation. Could be Model 1, could be Model 2. Does not really matter. And we could look to long that back up as well. Preferably also sweeping that main low. Where you kind of have a 1 right here. A 2 right there. Continuing with that return to zone right in that third tap. And then just have an aggressive recovery. Right here. And that needs to be aggressive. I want to see it be aggressive. If that doesn't happen and you just nuke down from there, I want price to come to 85.2. Now, the thing is, how I typically like to enter is through ranges, right? And if you go down there without having a proper range in your blue highlighted area with the blue dots, then it will probably be a bit fast of a move for me to look at any ranges to confirm and then to play. But there's always an entry, right? So what could happen if you do decide to come down and it's a faster move and you do something like this and then you scoot back up? Like there will be like a sell to buy, just like we had in here with that sell to buy. If it's planning on being aggressive with a good recovery. And then you'll get some sort of a retest followed by a range, because price cannot continue V-shaped price action. It needs to range to gather more liquidity for the next move. So something like that happens, right? We'll find that accumulation right here on the higher low, which will, I'm telling you, there will be some sort of a range that you can enter on. There always is. And even if there's not, and you do go down from here and you get some sort of a recovery, then you can simply look for the first pullback and the first proper range creation and enter on that reaccumulation schematic, expecting a reversal back up based off the sell to buy prior to it, and then you can get that low time frame entry for just a high time frame buy side liquidity target. But that's obviously if we go down from here, leave that buy side liquidity intact, and we can look just for price to rotate from liquidity to liquidity. But the thing is, what happened to Pepe is kind of also causing me to not exclude the fact that you can also just dump down from here lower. Because lower, if you've been following me for a while, you'll know that I love when I have high time frame structure demand getting overlapped with lower time frame structure demand. Obviously, this reaccumulation range of 250 plus days, that's one massive macro structure demand like this. Now, I'm not going to put that on my chart because I don't want my chart to be that colored up. But right there at that high, you also have that pullback. You have that sell to buy, which is this low time frame structure demand right here, following the structure up kind of from like the Trump pump right here. And that's on the lower time frame, actually in confluence with like a little breaker. A little breaker right here. That's what I had as a kind of like a refine level. So I'm looking at this high time frame structure demand. And price can easily come in there. Price can easily break down from here. Come all the way in here just to form a new macro range. To potentially run it back later on. to create a macro range where you have your high right there and you have your low right there. And then you look for massive bear market swing short distributions. If you take that high again, you know, and you kind of chill. Oh, chart lag right there. But all I'm saying is that the fact that we don't have a proper distribution is not really excluding the idea of price also having the potential of completely breaking down. Because, like I said, what happened on Pepe, for the people that don't know, like right here, I was watching for the same play. I remember it very good. We were compressing right here. Like we were compressing right there. And what I was looking for was a potential long into a short. I got no confirmation, so I was looking for a potential long into a short like this to create that third tap where you have your 1, you have your 2, and you have your 3. Because I was like, are they really going to leave that buy side liquidity above right there? And they did. And as you can see, they nuked it down, right? They absolutely nuked it down. So it didn't have a proper 3 tap. It actually had a 2 tap. However, in this case, the second tab itself did have its own valid TCT distribution model right there, which is different than Bitcoin, but overall, they had a high time frame range that lasted a bit less though. I would say around here, about 30 days, and you had a second tab and it just dumped. Okay, it just dumped. So you have a 2 tab right here. You also have liquidity above. But just because it doesn't have a valid distribution, I'm not excluding the fact that, you know, if you do come down and you just simply don't get any confirmations in here, you know, and it just sweeps liquidity, but it just goes lower, then yeah, you could also come all the way down to here, whether you like it or not. But I think at that point in time, the biggest mindfuck would be of people just being confused if the bull or bear market is over. This would be around a 30% correction. I think from there, if you can get some sort of a range with a lot of FUD and a lot of bearish news, and you get a proper accumulation, you can spot play this all the way back up to new highs. I genuinely do believe that. But then if you zoom out on the weekly time frame, it's simply a higher low for a higher high. That turns into a macro range right here. That then turns into a distribution to dump it lower. This is not drawn from a timing perspective, but just an overall idea of if you do come down on confirmation, you could get great swing plays. You can get great swing plays. So that's kind of my overall view on Bitcoin, right? It's like we have all these POIs. We have supply above. I even have this little liquidity POI on the chart. Just because you have those equal highs there with that weekend. I'm going to call this extreme because I don't want the people to be confused at thinking that they're the same. Because they're not. The upper one is better. So you're currently at extreme demand. If you start to close candles below this demand zone, there's going to be nothing that's going to be stopping price from coming to that range low. Now, you can get a wick from the range low, but you already did that prior here. So I would prefer if you just can have a deeper deviation, maybe sweep some of that 85.2K liquidity that we've been watching for a while, and then kind of manipulate below your range low like that and reverse it back up again, right? If there are no confirmations, they're not, and we go lower. If they are, we'll try and find a long on the recovery off of it, right? Trying to get a nice RR trade. But so far, Bitcoin has just been fairly weak. But the thing is, right? Maybe Bitcoin's price action hasn't been the best. I don't think I've even taken a trade on Bitcoin. But the altcoins have been having amazing distribution models. Like, actually amazing accumulation and distribution models. where I think the past 2 week time window has been the best performing 2 week time window on most alts for regarding TCT trading, at least. Like if you have a more trendy trading style and trendy approach, then obviously it's a bit more shit. But from a range trading perspective, man, we've been getting deviations of the lows, highs, and just rotations all over the place. I was drawing this trend line actually. Yeah. Now you're just building these lows. Let's highlight this a bit more. And we can look at this, right, in confluence with USDT dominance. So let me get rid of all these drawings real quick, because lots of people were asking me about my opinion on USDT dominance. Because obviously this chart has been amazing. This chart has generally been amazing to use for overall pivot point calls on Bitcoin. Oftentimes, especially in the last range, USDT dominance has actually been the better pair to watch. Like if we could have traded USDT dominance as a pair instead of Bitcoin, that would have been way better. But lots of people have been asking me about my opinion on this chart. And the thing is, right, when looking at this, the way I like to look at things at least, is like this has been making higher lows and higher highs, right? This has simply been an uptrend. And for the people asking me, what, Lars, why are you using smart money concepts on the pair that, you know, doesn't have leverage traders on it, this and that? It works, okay? It works. So you don't need to know how a car is built in order to drive it. So just use the chart. It's very effective. You can kind of, I can give you guys an explanation, but it's not worth the time why it works, okay? But chart's been simply making higher lows and higher highs. So this would be your high time frame market structure low. So this high never took that high, and therefore this can never be a confirmed low on any time frame. So what you kind of did is literally make lower highs and lower lows on the move down, and therefore expectational order flow would be somewhere a higher low of a higher high. Is that simple, right? Our price has been coming down, and we were bouncing from some levels. Right here, this initial push up was from this weekly order block right in that pivot point. And that's why you got the bounce. But the reason why this was such an easy call, the reason why Bitcoin on the reaccumulation range here was such an easy call to be so convinced that we're going to go higher, was not only that Bitcoin had a very proper Model 1 into Model 2 accumulation, USDT dominance went up following our structure from the top down, making lower highs and lower lows. And we wicked, SFP'd that market structure high. And let me do it like this. And the same way Bitcoin was kind of putting in a Model 1 into Model 2 accumulation, we had the same on the USDT dominance chart, where you had the Model 1 right here. You had the Model 1 in the Model 2, right? Where the Model 2 way more clear. I was looking at it from a Model 2 perspective. But you guys know you have all this liquidity below, right? Let me do it like this. You have all this liquidity below. You go back up. You have the redistribution schematic with the 1, with the 2, with the 3, all meeting the requirements. Nothing but liquidity below. You break structure. If you SFP and you break your structure from the low up, you're going to get a rotation to this low, and boom. There is your rotation to the low. However, what typically happens when price SFPing your market structure and you get that redistribution schematic and you get that beautiful liquidity sweep of all these lows, when you're in an area where overall you're expecting a higher low for the higher high, what you can do now is simply go on, doesn't matter the 2-week or the weekly, just a high time frame, and check this downward trend. Yes, we're making lower highs and lower lows. You SFP'd it. Boom. When you're downtrending, what can you do? You can pull your range now. Your range from low to high. Just like that. And this has been now the range that you are in. Very simple. Where you have an initial range low. And you have an initial range high. Let me make that red actually. And then price got its deviation 1 of the low. Okay, so on the higher time frame, this is in a potential accumulation model. Now we have these levels below. We can kind of keep them like this. Don't know what this date is. Oh, that's 26. It should be good. But what you need to be aware of is that this can turn into a accumulation model on the higher time frame. And above, you don't have that much resistance because you kind of came down in a structured fashion in the beginning as well. I'm seeing some more refined supply right there in the upper section of my current structure supply. But besides that, there's not that much above but buy-side liquidity right here. Which with the buy-side liquidity, I'm kind of representing all these highs here, making lower highs. You got some supply in there as well, but overall, it's a pretty decent curvature down. Not the best, it's decent. So when I see this, doesn't matter which chart, okay? We had an extreme liquidity sweep here already. So technically speaking, on the lower time frame, this could be a Model 2 accumulation already. It's just not something I would be interested in trading because tab 2 and tab 3 are relatively very close when you compare it to tab 1 and tab 2. And it's not a high probability model because you have this aggressive supply right above you. So what I would love on this on a high time frame is obviously you can have a model 1, meaning you would have to take this low one more time, which is definitely a good possibility because right below it, we have this beautiful structure demand right there. Very beautiful structure demand, about 3.67. And you have 3 different levels here. You also have a level at 3.11 or around 3.3. So different levels here. I drew them as individual boxes. But from a demand perspective, it is a bit less good, but you are allowed to look at this. Which is valid structure demand, making it your extreme demand. So, what I'm thinking, right, is if I want to have a proper accumulation model on USDT dominance, meaning if this plays out, it's just over for the bull market, it's over for Bitcoin, because like if this has such an aggressive push up, 70%, like that's going to be a 30, 40, 50% correction on Bitcoin. I would love price to actually go higher here, which is meaning Bitcoin going lower right now. Kind of reject from here. Maybe do something like this, preferably mitigate that most extreme supply right there on the 3-day, creating a potential distribution model. Get that dumb down, meaning get the push up on Bitcoin all the way down to here, and either bounce from here, creating a more extended accumulation model, or potentially just take out the low coming into here. And if that happens, you can have this range turning into a high time frame accumulation like this. And you can just have a full rotation back up towards 6.78ish, which is the range high. And therefore also the technical target if this range turns into an accumulation. Quickly save that. Now, going on a higher time frame, I want to check these bottoms. Oh, yeah. 4 months. How did I draw that? Let me check. 4 months from now, that will be June, right? That will be June. But that could be pretty crazy. June, where's June? There. That could work. I'm just thinking like, what if this can turn into a good bottom, you know? Where you have that low. Open, go lower. And this is currently where we're at, right? So this is currently what we've been doing right here. This actually went higher, just to clear it up. This is kind of what we've been having as of now. We have the 1, 2, and the 3, 1, 2, and the 3. That's a decent bottom. So what could happen in 4 months, right? If you can close higher and you can close this more bullish, and then the second candle opens, which will be in June, July. If you go down, that can just confirm a beautiful bottom, and you can squeeze back higher. Or you still go lower this month because you still have 4 months to go, and then do something like this and then close higher for the Model 1 like we were describing. You know, that's also possible. And then obviously if that happens on the 4th candle, you'll be looking for a higher low for a higher high, which is like sell signals for Bitcoin if that happens. Kind of depends how this candle develops. It has 4 months. It's a very high time frame. But that would be a nice bottom. I would love to take it out. I would love to take it out. I like the Model 1 the most if you do something like this. I would like that the most. And if you break down, right? If you break down, you don't get the push up, but you truly break down from the range, then expect a bounce. Let me go back to normal bars. If this doesn't turn into a bigger range, then I would just watch for a new range, something like this. And if you see proper accumulation model in there, then that will be a sell signal for Bitcoin for sure. But this is still my preferred scenario. It's not really drawn from a timing perspective, but overall, this will be extremely nice. And maybe, right, if this kind of gives us proper distribution signals, if you go up from there, then even if Bitcoin is not the most clear for higher prices, we can still confirm it. We can still confirm it. Yeah. Now, looking at this, what's been going on right here, which is a bit more local, is that I wasn't sure. I wasn't sure if we were going to put in a lower high for a lower low. So what we had right here was a beautiful distribution model. We took the liquidity from this high. Right, we took the liquidity from that high. And we just had a picture perfect extended distribution model where you had your initial range high, had your initial range low, got that push back up, deviation 1, extend range high to the deviation high, got that second push up, deviation 2, each deviation going higher than the previous one, breaking market structure right there, confirming the Model 1 distribution where the order flow objective of the move is to come towards the range low. And then prior to coming to the range low in one go, we actually came back up for extreme liquidity, which was on the news. And we put in an extended distribution model where your Model 1 goes over in the Model 2, which is extremely good. And you actually came back for extreme supply one more time to get TCT within TCT, where you can see here on the low time frame, based on that candle structure down the 2 hour, you had a low time frame distribution model. And that was absolute perfection. I wasn't expecting price to, I was not expecting price to take the low and just go up from here and immediately take out this high. I was not expecting that, especially with the way that we came up. I was not expecting an easy V-shaped recovery where it's not even a V-shaped recovery. It's like a very slow grind up. I was not expecting that slow grind up to just push higher past that distribution high. But it's making me wonder, right? It's like, I first thought we're going to get a pullback and we're going to do something like this. But we also didn't get the confirmation for that. Matter of fact, we actually longed Pepe when this was right here, and we took that right into a short. Like, we longed Pepe when we got the rejection, which was good, and then that hit to take profit, and then we took that into the short. Where if the short's going to play out, this must also squeeze higher, but just based on this chart alone, I wasn't really expecting it. The thing is, right here, USDT dominance grabbed all that liquidity on the left. Like, it was to the tick. Here. Looking at this high. This was to the tick. So, you didn't mitigate the supply. So, there is a reason to go higher. And with the way that we've been coming up and the fact we took out this high, you do got some supply here on the lower time frame. I don't know where that was. 30-minute. Did you came into that? You did not. I'm not completely sure what's gonna happen in here. You have a confirmed high time frame range that's very concentrated in the around the EQ based on this distribution range itself. But I would love, like I said, if we pull it back to this, I would love for price to turn this bigger range into a distribution. That's a big group. Okay, there you go. I would love if we can make our way back up and turn that into a higher time frame distribution, something like this. Or, obviously, like I said, if we do something like that and we actually go higher from here, again, we can maybe tap into that 3-day block, you know? Yeah, we can maybe tap into that more refined supply zone up there, which would be extremely nice, but maybe a bit too big for the current situation that we're in. So for now, we'll just be watching this range, but definitely if Bitcoin is going to that 85.2 and this can kind of give you some confidence into sweeping that high as well, that kind of gives strength to the idea of Bitcoin and also holding up, right? So it's not that I'm like seeing anything that special on the lower time frames on USDT dominance. It's more so the macro idea that interests me the most, where we could potentially create some sort of a macro accumulation that just reverses price back up. There are some resistance levels above, which you can again use in confluence with Bitcoin finding a bottom. Because there are some levels in here starting at around 7.2-ish. But you still have these highs as well that I would love to sweep. That would be amazing. But yeah, that's kind of the idea, right? That's kind of the idea on USD dominance. Or preferably we sweep the high one more time coming into supply. And if you can kind of keep these lows intact while doing so, you know, keep these lows intact, that makes for a nice target for price to come back for later on. That would be amazing. That would be easy. That would be very easy. And that's what I'm saying. Bitcoin doesn't really have this. Well, if that happens, you'll probably get something like that on Bitcoin right here where you sweep this low, comparing these two. So I have to see how it develops, okay? But that's kind of the layout that I have on Bitcoin and USD dominance on just the current local range that we're in, and then also just the macro time frame with potential macro accumulations. Let me check the chat real quick. Do you not think Bitcoin reaches 150k, 200k plus? No. No. Well, it depends. I don't think 200k, but if you come down and then you go back up, I would more expect it to just go into a range like this. But we'll see. We'll see. We also don't really have the cleanest. We don't have the cleanest. We don't have the cleanest highs. The thing is, if this was... no, I don't like this topping structure. I like these topping structures. Oh, these are so nice, bro. Oh my god. If we can just get something like that, that would be so easy. That would be so easy. It's the fact that it would have been even a bit better if you did something like this, but it's such an... Like, it's the monthly OPA, and you have such a tiny wick. Like, you deviate monthly OPA ever so slightly and just dump down. You know, when you've already also had the previous month low swept on the candle prior to it. So on the 3 month, it could turn into something nice, right? So if this can maybe close bearish or bullish, doesn't really matter. And then the other candle opens, so you do something like this. That's a perfect play, right? That's a perfect play. And whether it does something like this or it does something like that, that doesn't matter. Both will be good. And the play is the play depends, right? Like these, I'm thinking of making a lecture video about these bars patterns because they can be extremely effective, but they can be traded through two ways. It's either you're expecting a good topping structure of something like this, and then on the lower time frame, you're going to be looking for, you know, distribution models in here, or you trade it based off the confirmation on the bars pattern, where if this closes bearish, that means you have a good top, and therefore expectational order flow on the fourth candle would be a lower high for a lower low. And then you trade that lower high for the lower low with the confirmation of the bars pattern. So it's either you trade the expectation of getting a good top based on the confirmation on the lower time frame, or you're trading the confirmation of the bars itself. So now there's nothing. Now there's just two candles. That's nothing special. So it's a bit early, too early to tell. But we are at this point in the chart where this range itself is in decent size. Like this range from your new starting point is 63 days. But from here, it's already 88 days. So you're in that 70-day range. And just looking back at the previous two tops, like this range from start to confirmation for the true dump was 75 days. And this was only like 30 days, but that was also because we had an all-time high deviation. So that was already enough manipulation, right? So we're kind of at this point where the next significant move can be very significant in size because of the size of the range, right? A range, you kind of have to see a range as just price reloading. And the more time you have to reload, the harder the next expansion. So that's what you saw in here, right? Massive reload, massive expansion. Like this was a 120% move on Bitcoin. That's crazy, right? That's absolutely crazy. So we're going to be paying close attention to it. I was also checking the Bivel chart, the weekly Bivel chart. Don't know if you guys know about it, but it's simply Bitcoin's historical volatility index. But you can kind of see here that every time this drops and comes into this blue box, some sort of a significant move happens. So right here, this was back in 2018 when we went this low. Bitcoin all of a sudden crashed 50%. Now, the reason why this chart goes up is because it represents the volatility. And volatility is also there if there's a crash, right? So it doesn't mean that if this goes up, Bitcoin goes up. No. It's just the volatility. So since we've been ranging for so long, volatility is ranging / right now dropping because of the current range that we've been in the past 2 weeks on Bitcoin. But right here, you come into this blue box, you see 50% crash. You come into this blue box, you see 240% pump. Right here, Bitcoin pumped into price discovery again in the blue box. This was the bottom of the most recent bear market. And right there was also a tiny pump, but nothing worth pointing out. So you can kind of see if we come in here because we keep ranging, there's going to be an explosive move, right? Whether that's to the upside or downside or both is for the market to decide and for us to find out. Now, I quickly want to hop over into Sol because, man, when I pointed out this distribution schematic, I was initially not expecting. It's not that I wasn't expecting it. It's just like that would hurt, you know. It was the perfect playbook. I made like a 22-minute video explaining it in depth in the Discord when it played out. And there was an entry opportunity for like the most crazy RR short I've seen in a minute. But I missed it. I missed it. But yeah, I was looking at this, right? And I was truly like just talking out loud to myself. And I was like, if I got rid of any bias regarding a cycle theory or whatsoever, and then also having a portfolio, this and that, I was like, we went to the all-time high, we deviated it, we came back down, on the move up, we left liquidity below, and then we got to pump back up on macro bullish news of Trump launching a meme coin. Whereas, like, if I look at the chart, I'm seeing a potential macro Model 1 distribution. And when I look at news as exit triggers, we have the president of the United States launching his own meme that goes to fucking fully diluted valuation of like 70 bill. And I'm like, on the Sol chain, and that's literally the reason Sol pumped there, where on the move down here, we left behind a lot of liquidity, making it obvious that if market makers wanted to sell, they're using all that buy-side liquidity to sell it. And that was right here. And I was like, oh man, this could dump down. But we had to follow the rules, right? We had to follow the rules. And at that time, we had this key demand right here. So we had the volume area high because the range itself, even though this is right now becoming more and more of a compact range. Oh, secret level right here, range. Initially speaking, this was the range. Okay, that was the range, and these were just two deviations. And the volume area also promoted that idea, right? Where you can see the concentrated volume where the most time has been spent has been in this lower section. So it's not that you truly have like a proper confirmation. Oh, we're going to get a proper rotation down immediately, because you don't truly have acceptance back inside the range yet. And I'm referring to this range. And then whenever I see the volume area high that's so concentrated in one point, you know, when I see that volume area high be backed by demand, just like we had here, I'm like, okay, I need to see a bounce from here preferably, and then I need to see signs of weakness, and then I want it to go lower. And then right here is going to be the ultimate short opportunity. Now, that doesn't change the fact that if along the way here that we're making lower highs and lower lows, if we get a short confirmation on that lower high for the lower low, we can definitely take that. We'll just have to see what happens once we arrive at key demand. Key demand is lost, okay? Let me make that clear. Key demand is lost, and we're bouncing right now from literally the only demand that's there that truly can hold price up from actually going to 110. But zooming in here real quick, the entry opportunity that I missed was right here, where I was watching this range, and I was just checking this range where I had supply above right here that we actually front ran. I believe I had an alert at the supply and not at the range high. And then I had my initial range low, I had my initial range high, and we deviated it. Oh no, now I remember. I had my alert at the range high because I overlooked. Yes, I also make mistakes sometimes, guys. I overlooked the fact that we had a 5-minute order block right here. That was literally it. Now I remember. Right there. This 5-minute order block I did not see. And that was the perfect entry confirmation, because that means that this became now my POI for a third tap from a Model 2 redistribution standpoint, where if price comes in here, we can have a 1 tap, a 2 tap, and a 3 tap. And the only way to confirm it, or the simple way to confirm this, is by going on a lower time frame, looking at the structure. And the structure was easy, right? The structure was easy, even on the higher time frame, which you simply had as your swing structure, like the 2 to 3 minute. You had a breakup structure right here, making lower highs and lower lows. That's your breakup structure. So expectational order flow is a lower high for a lower low. This was your extreme supply of the move down. So price moved down here, left behind this structure supply on the low time frame as the 1, which is the last supply remaining before taking that high right there of the move down. Therefore, it's your extreme supply. Price came back for that. And then if you know the simple correlation between level 1 and level 2 and how they flow into each other, which is explained in literally lecture 1 of the TCT mentorship, right here you have your reconfirmation. So this could have been an easy trade right there on the break. Stop loss could have been there. Or even if you entered here, you could enter more there by trailing the stop loss and adding the position back. And then that would have been an absolute banger. That would potentially be the trade like this, that you can just open and then open the trade like this on a separate account, a swing trading account, and then log out, don't look at it, and just, you know, set an alert, and then that's it. And obviously de-risk once you came into that, like put your stop to entry once you came into that demand zone right here. But yeah, this is kind of what's been going on, and this is the trade I wish I was in. Now, I actually found a re-entry. I found a re-entry inside here. I posted about this on my social as well. I was short from this 1, 2, 3. Had a very refined entry with TCT within TCT. Took some profits at the lows right here of the technical target. And aiming for lower, but then I put my stop to break even on the remainder of the position. And price literally moved up to my stop and then went lower. So unfortunately not in that position anymore. But what fascinates me right now is how many people are worried about these token unlocks incoming, when it's like, why did you not think about this when we were right there? Like, you knew in like a month's time those unlocks were already coming. So why get stressed now when we already dumped down 46% from it? So an idea I was discussing was, what if you can get some sort of a relief move up? Now, this deviation is not really looking like a deviation anymore. It looks kind of more like a break. It's not a break yet. It stays inside that DL2. Actually bounced from it to perfection. So it can still be manipulation. But I was like, what if you get maybe some sort of a PO3 here? Mainly because you are at key demand. You're at the demand level right now, where if you lose it, you're going to go to 110. And typically when you're at those pivot point charts or pivot point areas on the chart, where it's either like you either lose this level or you go another 50% lower, that's when people truly get too stressed and panic. And that's when you typically get those relief moves. Okay? That's where you typically get those release moves, where maybe this turns into some sort of a PO3, where people become too scared in here. We get some sort of an accumulation. We push it back up in the PO3 form just to sweep all that buy-side liquidity and just reject back down and then complete the model. I would love something like this. I would genuinely love something like this, where like now the narrative, like you have to look at it from a narrative standpoint. When we were pumping up right there, there was nothing but bullish sentiment because Trump just launched his own meme on Sol, and Sol pumped, distracting the idea and distracting the herd of the fact that that is a potential macro distribution. Okay, hitting even 300. I never realized this. Actually hitting a crazy psychological level, eh? Was that 300? Or no? What's the high of this candle? 295.6. Oh, so we front ran 300. Maybe on some other exchanges you actually did. But right there, we had Trump launching meme coins, which is like quote unquote bullish sentiment. And now we have bearish sentiment because of token unlocks incoming. So if we can get some sort of a relief push up, sweep some of this buy-side liquidity that we left behind on the way down before a continuation towards the downside, this will be my preferred scenario. Now, where this lower high is going to be taking place, that is something for the market maker to decide. You have some POIs, but you have multiple POIs. Like this zone is a POI, that zone is a POI. You have multiple highs up there that you can sweep for an extended distribution model. I'm personally leaning towards a potential move into here. Did that mitigate? No. I like a potential move into here, but it could even be lower. It could just hit the technical target of the PO3. But I would just love something like this overall. Right here. That would make my day. Okay. And obviously, if you go lower from here, there's not going to be a confirmation. We have to check what's going on in that manipulation phase. And, you know, if there's no short in there, you're not taking it. It's just an overall pre-planning. It's an idea. And we don't trade expectations. We trade confirmations, right? But it's very crucial that you need to sometimes visualize what you think could happen for it to actually like make sense in your head. I don't know if I'm explaining that correctly, but what I mean is, for example, the most recent example is Pepe, right? Like for the people that haven't seen the video, just check this video. Right? We were talking about this, you know, coming up right there, finding an accumulation one long, taking it into a short. And it's the fact that I draw it, the fact that I pre-plan it, that I think about what could happen in the future, that I can be so prepared for when it happens in a live trading environment. If you didn't pre-plan it, and if you didn't draw it and kind of visualize what it will look like if it played out, it doesn't make that much sense. If you already did, it makes more sense in your head. It truly works that way. So I'm trying to think ahead here, and I'm like, well, maybe we get some sort of like a PO3 in here, you know, and actually go higher, squeezing back up, getting a lot of people bullish before just dumping it back lower again. And I'm drawing it, I'm like, yeah, that, you know, something like that could happen. And there are many drawings that just don't play out, but it doesn't matter, because if it doesn't play out, that probably means there wasn't even a confirmation to take it, meaning no loss. Matter of fact, maybe you even flip and you're like, oh fuck, we lost the high time frame demand now. Now I'm looking for a back test for a lower high, for a lower low to take lower. But planning is key. Literally, planning is key. If you can plan, you can be prepared, and if you're prepared, you can profit. It's as simple as that. I don't like to use that as a starting point of any range. I would love to go up and then come lower. If this turns into a PO3, and then accumulate from there. Have this as your starting point of your range. Do something like that. And then find that refined entry in here for the target up there. Having that beautiful return to zone in here. And not only having a beautiful return to zone, also having that supply location right at that range low, which is there. If you have a confirmed accumulation right here, okay, if you have a confirmed accumulation, a high probability accumulation, that supply up there is most likely just a trap. Just a trap for retail into believing that there's going to be a lower high for a lower low, just like this. And then they're trying to short the lower high, and they get absolutely liquidated on the blast through. It's always the case. It's even explained in lecture 8 of the TCT mentorship. That's on YouTube. How long would it take for Sol to play out? It could be something like this. If you're talking about the PO3, yeah, it could be something like this. So just these upcoming 7 days. That's typically what you will see. if it plays out, this is what you want to see. And this is where you want to enter. On the 1, on the 2, on the 3. Yeah. That will be clean. That will be clean. I'm looking at it invertedly and I'm like, it does look like less good from an accumulation standpoint, but it always does. Like, if you know, you know, right? If you're in the Discord, you know. I don't for some reason I like distributions way more. I wouldn't particularly look at this from an accumulation standpoint, but I would look at it from like more like a distribution standpoint. Weird how that works. But yeah, this would be my most recent idea I'll be looking at. And then people will get too bullish up here, and then you reverse it back down. I think it's just human psychology. I think it's human nature of like, the price can easily like more easy fall than shoot back up. It's harder to climb than to fall in like human nature. Let me check the chat real quick. Hope you're getting a cut for the ad that just played for me. Do I have ads on the stream? Bro, that's not... I don't even know. Bro, I'm the worst fucking YouTuber. Are there ads on this stream? That's not supposed to be the case. I'm sorry for that, bro. I'm sorry for that. I haven't checked gold yet. SVR, Lars has made me so much money that I feel dirty about it. Today was a good week, bro. It's Tuesday and we're done today, bro. We're low-key done this week because of Pepe. We're generally done this week because of Pepe. Like that was a nice play. That was 11 into 3. I didn't make 11 though. I made like 5. Because I didn't have that as my final target. I took TP at the technical target. But you only need 5% a week. 5% a week puts the Lambo on the street. Okay? And 1% a day keeps the day job away. So this was absolutely clean. Also, the fact you swept this first higher time frame, lower high. It's just perfection. And you got that supply hanging right above. Right here. I still have 50% of the position open, by the way. I took a 50% TP right there. So I still have 50% remaining for something like this. If the stop loss is at entry, right? Stop is at entry, so... Preferably, I would want to come down, not only for the current short, but also in general, if I want to find swing longs, kind of, you know, making the transition into Pepe. If I want to find swing longs, then I want this low to get taken, right? You have this, what was this? Like 4-hour structure demand. Yeah, so you have that structure demand right there, which is right below this current low that we bounced from. And we have all these lows building up. Like I was talking about the compression effect in the range. First move, you know, tending to be the fake move. But also, you just have your initial range high, initial range low. So in general, if you want to be bullish, right, and if you want to have a proper move up, obviously, I want to see a proper accumulation, which is as to my idea of price actually having the strength and the power to get that move up. So if we go down from here, losing my voice right there. If we go down from there, then most certainly that is long-term better if you turn it into accumulation, obviously. But this is the extreme demand, okay? This is the extreme demand of that entire swing structure. And with swing structure, I'm talking about these higher lows and higher highs. This is the last demand remaining before price taking this low right there. So I would just love to get some sort of an accumulation model in here. Something like this where, you know, we had that fake move up, move it down, turn it to an accumulation, run it back. If you have a proper accumulation here, I'm not expecting that much from these supply zones. Like, you can get a rejection from it, but it could just be a rejection for a higher low for a higher high. I want these highs to get taken right here. I want all of these highs to get taken. This high, these highs, these right here, these two as well. And now from there, you kind of run into an obstacle. Because even though, technically speaking, you are still in bullish swing structure, it looks so heavy. And it's also valid from a range trading perspective. Because you can pull your range following your swing structure from high to low. Right here. And then if you put on the DL2, you'll see, look at that. Never a high time frame close above. Matter of fact, beautiful topping structure right here. Like boom, boom, boom. Absolutely beautiful. I wasn't watching this on the monthly chart. And that's why you can get a full rotation back down. So even if you do come up, which is very normal. It's very normal to have an aggressive rotation all the way down to extreme demand. And then get a push back up prior to having a full-on rotation to the range low. But the reason why I'm saying this can also be looked at from a range perspective. Maybe we just get a push up here after accumulating to reject from supply and just go lower again to take out all these lows. It looks very heavy. And I don't know if it's going to have the strength to put in new highs. But it all depends on what you get in here. All right? You need to have your confirmations. If you don't have your confirmations, you're not going to short it. Right? But as of now, even though your structure is up, this is technically also a valid range deviation. And for that reason, I'm not completely sure if it's going to have the power to come back up. Now, if you can close above these points right here, if you can close above these supply zones, you're going to sweep it all. Because above these supply zones, one high, two high, and a lot of highs like we discussed earlier. So it's not that you should panic, right? I wouldn't panic here right now. Like the best place to take profits on spot, at least, was when you deviated this high in price discovery after getting the Coinbase pump. But obviously that's way easier talking in hindsight, right? It's way easier talking in hindsight. So I would just look what happens in this range, in this current range that we're in. And then, yeah, this can break down, but like, do you want to sell out of being scared after a 72% correction? You know, I would just accept the loss. Honestly, I would just accept the loss. I would be like, nah, that money is gone. If it goes to zero, it goes to zero at that point. Well, it low-key depends on where your entry is, I would say. If you have a crazy entry from here, then, you know, it might be still worth it. But, yeah, I would love an accumulation in here. Maybe get a pump up, sweep all these highs out. And then here you got to be careful. If I see any mid-time frame distributions like this in that point right there, if I get something like this on the lower time frame in that high, I'm going to be very scared. It also depends on how we come up. If we come up aggressively, it depends. If the move up aggressive has structure that leaves behind demand, right? This is just an aggressive move. But if it's a pump just like right here, it can just be reversed like we saw right there. You know, like something like this, a pump and a dump after getting a distribution right there. So it kind of depends on the way we come up and what happened prior to coming up in general. Right here where we're currently at. But more local, I would want a sweep of the low coming into this demand, accumulating here, having your 1, having your 2, having your 3. Oh. And then see what happens from there. You got to be aware that maybe it doesn't even have the strength to come there, right? Maybe it does something like, maybe it does something like this. And doesn't even reject from that supply. Like that. It's always a possibility. I would just prefer to sweep those highs. So that would kind of be my Pepe playbook. And if you go lower from here without even getting anything, I would watch for sweeps of this low. But that's scary, bro. Like that chart looks then like that's starting to look like a whiff in a popcat, you know, where you're just deviating the high and you're just losing key structure. You would have to like go on if you have to go on, bro, this says enough. If you have to go on log mode to not be like so stretched out because you had such an aggressive pump and dump, then you know the chart is just shit. You know the chart is shit. Like at that point, like there's nothing in here, right? Then at least like if you break that low, you're gonna go to this low, you know. So then it would just kind of be over, in my opinion. So the best idea for me right now is taking that short, where the final TP is right here, into a potential long, if price and the market makers allow it, and then run that back up to some more buy side liquidity and supply, and then see what happens from there. Kind of my preferred idea. Yeah. Give me that Lambo convertible. Yeah, and it depends on ETH a bit as well. ETH has an okay chart. Like we deviated that low off the trend line, sweeping all that sell side liquidity. And now we're ranging. Now that this range shouldn't be a surprise to you guys. Like we talked about this. I think I even talked about this on another public live stream where it's like, if you have such an aggressive move, such a big liquidation on so high volume, like you can see, massive spike, like one of the biggest spikes, you can expect some range bound price action, you know? So it depends a bit on what ETH also does. 3K is just heavy resistance. I think if you can flip 3K, not even 3K, if you can just break through this supply right here, you can maybe have a crack at the highs. But the thing is, you have to look at it like this. The fact that the market makers have done nothing properly from like a pattern recognition, like nothing. There has been no altcoins pumping into like actually this entire cycle. You have Bitcoin hitting a new all-time high prior to the BTC halving, and then you don't have ETH running, and then you don't have altcoins running when Bitcoin is consolidating in price discovery, but actually altcoins is getting absolutely rugged. All those things is like, what do you think is going to happen with the general thesis of when something is compressing in the range for a long time, when it breaks out, it typically trends for longer? Like imagine you just do something like this and you go higher and you break out of this pretty aggressive. I want to draw that better. Let's say you do something like that and you reject from there and you break out pretty aggressive. And you just range from here and you just dump it lower. Where you have that all-time high deviation. Like talking about a trap, which is something market makers have been doing nothing else but setting traps. It's like, bro, this would kind of spark hope back into believing that we just had the biggest shakeout in history and now we're fully back into the regular alt season for the 40, 50, 100 X's. And then you just have the manipulation right there to dump lower. It's like, damn, you know? Like, that would be a crazy play. That would be a crazy play. But if that happens, bro, I'm not even kidding, guys. And I know this may sound crazy, but if something like that happens on ETH, where you deviate the all-time high, and that's going to be confirmed if you have some sort of a proper distribution. And I don't want to sound like a bear now. I just literally want you to just be aware of the scenario. if you get a 1, a 2, and a 3, and there's some sort of a good looking high probability schematic, I am 100% serious when I say that is the target. I will want all these lows to get taken out. Just from a trading perspective on the macro time frame. If you don't confirm it, right, it's never going to happen. But if you do, I want to see this. And then I want just a good old reset for some better price action. But that would be my play. Honestly, that would be my play. But let's keep it off the chart right now because it's a bit scary. It's a bit scary. Let me include that. Oh, shit. No, it's all good. But for now, we're just trading this range-bound price action. And it was kind of, we were fighting it, right? So we had the potential 1, we had the potential 2, 3, model 1 accumulation. Kind of going over in an extended accumulation model. I was watching this. And what happened in here... Let's put that back on. If you get something like this, a 1, a 2, and a 3, and then you have the extended model sweeping that extreme liquidity. We saw that we had that beautiful reaccumulation where you have the accumulation model inside of the confirmed higher time frame accumulation. But then that rejected super heavily off that extreme supply. And, you know, a few people in the server actually pointed out and they were like, you know, if ETH typically pumps without Bitcoin pumping with it, that's not the best, is that the most bullish signal? And from there, we actually turned this range that we were also watching, obviously ranges within ranges. And we had the 1, and we had the 2, and then we had the 3. Not the best third tap. Don't really like to trade those third taps that are like below the first tap in combination with just having more refined supply above. But there were other pairs like Pepe who put in some crazy taps. So now it's kind of, it's still fighting it, right? It's still fighting it. Like, are you going to go lower from here? Like, probably if you go lower, you would have to redraw your range. Probably from this starting point and draw to that high. Or this is going to be the range. Range low, range high. And then look for new accumulation models. If you go lower from there, you simply have to look for complete new ranges in here. You'll probably bounce off something in this wick. I don't really care where it bounces off. It could even take the low. I'm not a big fan of taking the low because you have such a big liquidation event. But bounce off something in the wick and see the new range, trade it. If you go higher from here, right, deleting these ideas. If you go higher from here, you have to redraw your range. So let's say price goes up from here. You have to redraw your range from this high to this low. And then you need to look for potential distribution models where you deviate your 1 and then you watch for moves in here for a 2 and a 3 that get then reverse price completely down, coming into that 3K resistance. Preferably you push back up to 3.3, kind of neglect this 3-day or daily order block, go lower and just confirm a higher low for a higher high and reverse it back up, right? That's also a scenario if you break out from this range, which would kind of be the case if you come into that upper supply section. But yeah, those are kind of my scenarios. I'll just have to see how this currently develops. But the range bound price action in here is not even for that long yet. Like, I know people get sick and tired of it, but it truly started only like 15 days ago. Like, when you compare the size of the liquidation to the previous ones, like, this was a bit of a profound one. This one was like 95 days, but I'm just looking at the size of the liquidation and the size of the wick right there of the sell. just like we had here. And then with the range that followed afterwards, like this was a 94-day range. And then right here we had a big one. Right there, this was a 50+ day one. It's a decent size one. This was 33 days. So it's not that weird to have even a minimum of like double the current duration in that range. Oh. But yeah, even if ETH breaks out and then you see those coins coming into resistance and you make a new all-time high, be aware of that scenario I just discussed, you know? But as of now, what I would prefer, honestly, if yeah, because you guys always like my preferred scenarios, I would prefer to, it doesn't matter from where, but go up first, okay? Create some sort of a distribution model, go down, and have a range and squeeze higher. That's what I would prefer. It's not drawn from a timing standpoint. I never really draw based on timing, but more so take that high, get a distribution short, go back down, people fear, higher low, fill the wick more, accumulation, push up aggressively deep into that supply, showcasing that the supply is going to fail, higher low for a higher high breakout. Get people to be bullish, fake out, dump, you know? But there's so many scenarios from here. You can go lower, sweep that low. Matter of fact, I actually have a level. Last thing I want to point out, I have a level starting right here. I think if you want to have a more macro uptrend, or maybe this even breaks out, bro, if you do something like this, that could also be crazy. So there's so many scenarios here on ETH where it's like, you can kind of be aware of them all, but I'm just, I am aware of them all, but then I'm just trading the range in here because there's so many scalp opportunities in here that oftentimes these big moves, they don't even give me the best RR plays. I generally get my best RR plays on like these internal range plays where we just have such tight invalidations, because typically the bigger moves are also on just like bigger volume and just more aggressive V-shaped price action, which is less my style of trading. Okay, but that's kind of the outlook. That's kind of the outlook on Bitcoin, USD Dominance, ETH, Pepe, Sol. That's decent. We also have XRP. Oh, that's something I would prefer. Boom, boom. Or if we're going to go lower from here, do boom, boom. Or if you go lower, draw the range. It's basically the same, bro. It's the same on every fucking pair. It's genuinely the same on every pair. It's like you can have this range, that range can turn into a bigger range. You know, you can look for accumulation here. You can look for distributions. It's a typical play. Purple dot stands for all-time high deviation. It's very typical. Okay. So I think the higher time frame plans have been clear. For now, I went lower on Pepe. That's kind of my final target. Right here for the short. So if I see anything special new, this was all more pre-planning. If I see anything more special new in the live environment, obviously I just trade live inside of the Discord. So I'll definitely be posting that in my channel. If it's something crazy on the high time frame, I might post it on X as well. And yeah, you guys should just focus on improving your TA as much as possible and your understanding of being able to read charts, because that's going to improve. Like, that's, if you focus on becoming a trader and being able to read charts correctly, you don't even want to be an investor anymore. Like, you just want to trade because you know that can net you so much more money consistently each and every single week. Obviously, if you do it correctly. But even if you just want to invest, it's very easy. Like, if you want to run 5 kilometers, right? Very easy. Are you going to run 5 kilometers as your max each time, or are you going to practice 10 kilometers? So when you run 5, it becomes way easier. probably going to run the 10 kilometers. Now, how I translate this into the charts, if you want to be a spot trader, if you want to be an investor, you have to look at the higher time frames. It's so much easier reading charts on the higher time frames when you can read them on the low time frame. So if you even practice on the low time frame, your high time frame reading is going to become way easier. Because on the low time frame, you have way more examples. And if you can determine what price is going to do in the next few hours and minutes, imagine if you have the daily/weekly time frame to make a decision. You have endless potential of thought processes and time to act and take trades, this and that. On the lower time frame, it's way more strict, way more fast, and execution have to be way more precise and good. So if you practice on the low time frame, your high time frame is going to get better. So if you just practice on becoming a trader and you can take these intraday trades properly, one, you're going to realize the amount of money that can be made if you compound it properly over time. Two, your swing trading, spot investing, it's all going to become better as well. Okay? So guys, we go for an hour and 30 minutes, just a bit longer than I initially expected, but took some time to go over all the macro charts, too, also for myself to kind of map it out. Very important to take some time off, to take some time once in a while to zoom out and to really get a clear picture of what is actually going on in the higher time frames. So did a little public stream Tuesday because Monday I had my girlfriend's birthday, and I can just only advise to everybody listening: start learning how to read charts. It's gonna improve everything. It's becoming a trader's market slowly, so you gotta adapt or you will, quote unquote, die, is what they like to say. But at least stripped away from all your money, okay, by the market makers. So I appreciate all of you for tuning in, and I'll see everybody that's in the Discord. I'll see you all tomorrow morning. Okay, peace out, guys.